Assalamualaikum. My name is Amalia Akila binti Muhammad Zaid and I will start with question A. The company should choose ITA or pioneer status. RSP Sendirian Berhad is a new manufacturing company that participates in promoted activity and produce a promoted product. The company should choose ITA because it depends on larger capital intensity business. The company will enjoy more tax incentive derived from capital intensity. Pioneer status required larger profit for the company to minimize tax liability. Since RSP has suffered minor losses for 4 years of operation in the year assessment of 2017 until 2020, and a small profit in the 5th year in the year assessment of 2021. It is not suitable for the company to use pioneer status. Hence, the company should choose ITA as the losses can be carried forward until the exemption period. RSP becomes profitable in the 5th year YA 2021. Next, I will pass to Nelly for question B.
Thank you, Akila. And hi, my name is Nelly Adiliminti Muhammad Azhan, and I will proceed with question B. Question B asks about the commencement of business and minimize non-allowable expenses. The answer to question B is prior to the commencement of the business, the company incur an expense for staff remuneration, respectively, and since it is a revenue expense, these expenses will not be deductible because it did not incur wholly and exclusively in the production of gross income and the claim of capital allowance when the business started. Moreover, the company may obtain a tax deduction for revenue expenses incurred. Non-allowable expenses will result in much higher income because they are not deductible from the business income and will be added back. To minimize the non-allowable expenses, RSP should start incurring the cost, which is staff remuneration amounted to 500,000 after the commencement of the business, or reduce the expenses that are non-allowable as these expenses are not for a deduction. That is all from me, and I will pass the following questions to the next person. Thank you very much.
Thank you, Nelly, for your explanation. Now I'm going to explain for the next question, which is leasing or outright purchase of assets for assets not qualified under ITA, for example, motor vehicles, and we need to choose the best option. We need to identify which of these options is the best choice for RSP Sendirian Berhad. Firstly, I am going to explain the difference between the leasing and outright purchase. The first difference is from the method of financing. So, leasing required a smaller monthly payment and a small repurchase at the end of period. Operating leases can be provided in any specific situations and exempted from tax. For outright purchase, the whole cost of an item in cash. The asset purchase involves turning cash in the balance sheet. The asset will be fully owned by the company and will always be available for use. The next difference is from the acquisition cost. For leasing, the company can acquire a new and more expensive equipment, especially when the company is facing the financial problems. The company also allowed to run a higher quality equipment that is less likely required to be repaired. For outright purchase, the acquisition cost will be at the lowest cost as they do not have any interest to be paid and the company can extend the repayment schedule as they likely want to. And the last difference is about the capital allowance claimed from these two options. Leasing, the company is not entitled to claim the capital allowance on the leased asset Since it is not fully owned by the company is entitled to claim the full leasing charges that's subjected to passengers vehicles which is restricted to 50,000 ringgit or 100,000 ringgit as a revenue expenses if it is wholly and exclusively in the production income of the company. For outright purchase, the company can claim the capital allowance that will be based on the full cost of qualifying assets, except for passenger vehicles that are restricted to 50,000 ringgit or 100,000 ringgit. The company is entitled to claim the initial allowance and the annual allowance on the first year and annual allowance for each subsequent years until the full relief is given for the qualifying capital expenditure. After knowing the difference, I will explain about the decision that we need to make to choose which of these options is the best. RSP Sendirian Berhad should choose the acquisition of assets through leasing because it would be the most advantageous choice to tax planning. This can be seen from these three criteria, which is timing, set-off, and utilization. The full amount of lease rental is given revenue deduction in the year of incurred, while the claim of capital allowance need to be spread to various years in accordance with the specific rate. Next, for set-off, since RSP Sendirian Berhad has a current year business loss from the year A 2017 to year A 2020, the leasing charges would increase the adjusted losses. The current year business loss would be allowed to shelter other income in that current year at the aggregate income level. This will result in the lower chargeable income and the income tax payable will also be lower. In addition, if the current year business loss of RSP Sendirian Berhad cannot be utilized in that particular year at aggregate income level, the unabsorbed business losses can be carried forward to be set off against any business income in the future years at the statutory income level. Thus, it can be said that the acquisition through leasing is the best choice to reduce the tax liabilities of RSP Sendirian Berhad. That's all for this question. For the next question, I will give it to Akilah to explain it.
Thank you, Ifa. Back with me, Akilah, with question D. Question D asks about interest restriction, RSP, financial institution, and TSW. RSP Sendirian Berhad borrowed money to offer TSW Sendirian Berhad a loan rather than generate the revenue for the company. As a result, the amount of interest that may be deducted will be limited depending on the restricted amount of interest will be added back to determine business adjusted income and will be assigned to individual investment sources. The excess interest expenditure cannot be carried forward and would result in a permanent loss if the limited interest could not be offset against the income of connected investment. In this situation, RSP Sendirian Berhad ought to charge TSW Sendirian Berhad a higher interest rate to boost their interest revenue and offset the interest cost they must pay to the financial institution. Next, I will pass to Alia for the next question.
Thank you, Amelia. Assalamualaikum and hi, I'm Alia Nabeeha. Next, I want to discuss about tax planning on disposal of fixed asset. Since the disposal of machineries by RSP will give rise to a huge profit on disposal of fixed value, it will result in sales proceeds of the machine exceeding its residual expenditure. Therefore, the excess will be recognized as balancing charge. Balancing charge is a taxable income and one of the ways that can help reduce the tax liabilities of RSP in the presence of this balancing charge is by postponing the disposal to the following year instead of
disposal at year-end in order to defer tax liability. Next, regarding the disposal of the assets, RSP have two alternatives that had yet to be decided. First, RSP might dispose it to the company's subsidiary Inara Sdn Berhad. Disposing the assets to Inara will be subjected to control sales provisions, where there will be no balancing adjustment. This is due to the provision stating that the assets would be considered to have been transferred at the tax written down values of the transferor. Second, RSP might dispose the assets to unrelated company. By doing so, this action will not be subjected to control sales provision. Hence, there will be balancing adjustment. With situation facing by RSP where there will be a balancing charge, it is advised for RSP to dispose the assets to its subsidiary Inara in order to eliminate the balancing charge, which will be reduce the tax liabilities. That's all from me. Next, Amni will discuss the next question.
Thank you, Alia. Let's proceed with question F. Group relief is a practice of allowing current business losses incurred by one company within a group to be deducted against profit from another company within the same group. With effect from YA 2019, a company that qualifies may surrender a maximum of 70% of its adjusted loss for a year of assessment to one or more related companies. The claiming company may claim adjusted loss from more than one surrendering company. In this situation, RSP Sdn Berhad, TSV Sdn Berhad, Inara Sdn Berhad, and Top Sdn Berhad is related companies within the group that are eligible for this relief. However, they must fulfill several conditions for eligibility of the group relief. The condition for eligibility is as follows. First, group relief is available for all Malaysian incorporated tax resident company. Second, claimant and surrendering companies each has paid up capital more than 2.5 million at the beginning of the basis period. Third, both claimant and surrendering companies must have same accounting period. Fourth, claimant and surrendering companies are related parties. 5. Both claimant and surrendering companies are not currently enjoying certain incentives such as penal status, investment tax allowance, and reinvestment tax. 6. The claimant must have aggregate income in the YA. 7. Both companies must be subjected to tax at full, which is 24%. Following that condition above, the companies that are eligible for group relief are Inara Sdn Berhad and Top Sdn Berhad because they fully meet the condition where the percentage of shares held by RSP Sdn Berhad is more than 70% of ordinary share capital. With that, TSV Sdn Berhad is not eligible for the group relief since it only has 60% of ordinary shares owned by RSP Sdn Berhad, which is less than 70%. Moreover, RSP Sdn Berhad is not eligible for the relief because they are currently enjoying investment tax allowance. Since Inara Sdn Berhad and Top Sdn Berhad are eligible for the group relief, therefore, the computation of total income is by the claiming company. In these circumstances, the claiming company is the Top Sdn Berhad where they gain aggregate income forecasted 1 million ringgit per annum from YA 2019 onwards, whereby the surrendering company is Inara Sdn Berhad, which incurred loss of 800,000 annually from YA 2019 to YA 2021.